what is a forensic expert? And, this is, these kind of experts are used a lot in the court. There's different names for them, a lot of different names for them for different things and all that kind of stuff. So we're going to kind of go through all the different synonyms, I guess, that are used for these types of things. And then we're going to kind of talk about what the purpose of them and what their role is in the case.
It's a person who evaluates an issue, a body of evidence, and gives their opinion on what it means.
Right. So it could be a mental health diagnosis like that of one of the parties. It could be what we call custody evaluations, where they're looking for severe, issues in the family dynamic regarding custody, regarding who should have custody. Right. And then probably the most commonly used expert we see is a financial expert. Right. And sometimes that financial expert is evaluating the value is determining the value of a business. Right. Sometimes that expert is like an appraiser that's determining the value of a home. Sometimes it's a financial expert that's determining how much income is available for support. Right. That comes up a lot when we see self-employed individuals. Right. So there's a lot of different areas that, we tend to think of forensics as numbers. Yeah. But really the forensic expert can be applying their craft to various topics in the divorce process.
Right. So, one of the things you have to, in determining whether to ask for this, first of all, are there really intractable issues of psychological, the court, is there very serious substance abuse problem? Is there is this person suffering from schizophrenia or bipolar or something that really impacts on the safety of the child? Right. I would say that, I've been doing family law for 15 years, and I maybe have had 2 cases that have had full-blown custody evaluations. Right. I don't favor them because they take the decision out of your hands. Right. And most of the issues in child custody cases are around 2 primary things. Number 1, support of the other parent's parent-child relationship, support of frequent and continuing contact with the other parent, and stability and continuity. Those are the biggies.
Well, and often often when people want these, it's like, and they don't realize how much they cost either. Right. And it's a very difficult solution. And if the problem is minor, it's not worth the cost and the stress and everything on everything.
And they're very invasive.
Right.
They take a history all the way back to your childhood, and did you use drugs when you were a teenager? And, right. A lot of the stuff that the skeletons that are buried in your closet that you
really don't want to think about.
Yeah.
You'd prefer stay in the closet.
Right. So it's an invasive and personal process, and I tend to not want to put my clients through the expense or the process itself, right? Except in a very limited circumstance. But really, if your position is that your co-parent is too crazy to parent, then that's where you need to go.
Yeah. Okay. All right. So let's talk about the financial, and I'll ask you the same things, which is what range do you typically see of cost for those? How long do they usually take? And what does the process look like with them?
Okay. So I'm going to attack that one from the other side and say, basically, they say that figures don't lie, but liars can figure, right?
I've never heard that, but I like it. Yeah. Figures don't lie, and that's one of the things I like about them. 2 + 2 is always 4.
It is, yes. At least,
At least when I'm adding.
Yeah. Right. Right. So the problem is that there are many ways to fudge accounting so that it looks like you're making less money, or it looks like something's more valuable, or it looks like something's less valuable. And there are ways of categorizing things as expenses when they're not really expenses. You can sometimes characterize like people will write off their car. They'll write off the whole value of their car and its depreciation, even though they're only using 10% of it for their business. And there's various tricks that you can play with accounting. That's how the government makes these huge spending bills. And they say, well, this bill is paid for. We can spend this $1 trillion because we're going to make it up by, postponing this program and taking some out of COVID funds, and this and that, and it's voodoo. It's kind of and people do this all the time in real life. Individuals do this, and they do it so they don't have to pay us not the support that they really owe, or they want to cheat the IRS. We all want to cheat the IRS, let's face it. And they want to, depending on which side they're on, they want an asset to either be more valuable or less valuable. If you've got a business, for example, part of the business is the value of the equipment. So you've got a location, and you've got some computers, and you've got some printers, and some office equipment and all that. Is that the value of your business? It's not. Right. The value of your business is the value that you have created by, over the years, creating a reputation for that business, advertising for that business, having clients be satisfied with the product of your business. How do you measure that? Right. And there's a whole science around that. Right. And so you need, more so than in the child custody, because I've had many cases with forensic accountants. Right. And you really need somebody to do some, what we call projections on what that business is capable of earning into the future. And then you have to have a reasonable way to mathematically turn that into a present value. Right. And for that, you usually need either a 730 or you need your own expert.
Yeah, and I want to make a comment about something you said when you first started, which is that, people are always fudging numbers, and it's easy to do that, and we do that all the time and whatever, mm-hmm. As individuals and business owners and different things like that. But what I would like to say about that, though, is I see so many, particularly women, but so many clients who have spouses that own businesses who are so worried about that particular issue. And let me just say that if you have a good forensic expert, the technology is such now that cooking your books is an extremely difficult thing to do and cover all your tracks. I would say nigh impossible. So I'm not saying that people don't get creative with their, taxes or their P&Ls or whatever. They do. But if you have a forensic that sits down and goes through every line of a bank statement and every line of a transaction and all those kinds of things, which is what they do, they go through every line over a period of years, it's going to be really, really difficult for somebody to try to fudge that. Right. You can't really do that. So you one of the things I would tell you is trust your forensic. Right. Yeah. And trust what they're saying to you.
Well, we have a case where the issue is income available for support. Mm-hmm. And so our client is claiming that he's had a couple of really bad years. Yet the bank statements would seem to show that there's revenue flowing into his business. Right. So we have to determine whether that is offset by costs or why, how do we reconcile this and how much of this income is really available for support. Right. And the expert that we hired for this has asked for a $10,000 retainer, right, which I'm quite confident he's going to spend. Right. All of it. Right. So this is a very expensive process, usually reserved for the higher amounts of money. It involves taking thousands of pages of bank statements and entering them. There's a huge data entry element to this.
Mm-hmm, there is. So what are we looking at timeline wise and cost wise on this type of financial evaluation?
Yeah, I would say that to get an expert to me in a complex financial case that's going to show me what I need to do as far as discovery, I think you're looking at $5,000, and I think to get the case ready for trial, maybe 10.
15. I think we approached 20 on the one. It depends on the estate.
Yeah.
On the state we had, that was a state. If the estate's like anywhere from 2 to 7 million, I would say you're looking at 15, 20. Yeah. If you start getting in excess of that, you're talking, 7 to 10 million plus. I mean, you could go up to 40, 50,000,
Right.
Depends on the amount of records that they have to evaluate. So this again is no cheap alternative, but to me, this is justifiable a lot more of the time, because if you're talking about a multi-million-dollar business and you're spending 10 grand to have it evaluated, well, that's a no-brainer.
Right.
Because sometimes I have an MBA in accounting, and I'm not a business evaluation expert, but I can usually get in the ballpark. There's general methods like discounted cash flow method and things they use to evaluate. But I always say to the client, I have one I'm working on right now, and I think that business is probably $1 million, maybe $1.5 million. But, I'm saying to the client, and I'm participating.
Well, that's a big spread.
Well, and I'm talking, and I'm talking to the client, and I'm kind of giving her high end and low end,
right.
And I'm her coach in mediation is what I'm doing in this particular case, and it's like, we could be off by, it's worth it to me to spend a few thousand on, and especially if you do it in mediation and you get a joint evaluator, a lot of times you can get a value for maybe $3,000 or so, right, depending on the area of the country you live in. And so to me, it's like, well, when we're talking about like a few $100,000 discrepancy, mm-hmm, that's worth a $3,000 to $5,000 evaluation.
Right.
And that's really always the trade-off is you just have to ask yourself, okay, if this is worst case and it goes to trial and I end up spending $25,000, is it worth it based on what I think the business is worth? Because if you have a business that you think is worth $100,000 and you're going to spend $20,000 to evaluate it, I'm not sure that you're not better off to cut your losses and come to an agreement.
Yeah, I mean, there's always that guy who runs an insurance business, and or just to pick an example out of the air, or he has a machine shop or whatever it is, but he is the only person that is the employee of that business. In other words, it's really a job that he has created a business around. A lot of times that's what we do, right? We decide to become self-employed and we end up building a job instead of a business.
Right.
But the business is, after this guy retires, one of two things is going to happen. He's going to sell his lathe and his metal bender, and he's going to go into retirement, or he's going to give the business or sell the business to somebody else who will then have to employ somebody to do his job.
Right.
And, in that situation, you have to think, well, is it really worth $5,000 to get this business evaluated, or should we just ballpark it?
Right. Right. Because if it's not producing far in excess of what the person's earning,
right.
If after you subtract earnings, there's a payroll, I guess is what I'm trying to say. Like with me and Thomas, after you subtract our payroll, if there's nothing left over that our business is producing, then our business isn't really worth anything minus the two of us.
Right.
But if we have $100,000 in profit on top of what we earned as income, then we could theoretically plug two other people in with our skill set and still be earning $100,000 a year from the business. Right. Then it's got value.
Right.
So there are different, and honestly, I see so many people say, oh, it doesn't have value. It doesn't have value. It's only me. It doesn't have any value. 99 times out of 100, I find the court finds that it has some kind of value.
Yes, that's true.
So some kind of something. Like even with us, if we didn't make any more than our salaries, even we still do have a name. We have advertised, right, and we have,
we've carved out a niche for ourselves.
Right. The names of the business are out there.
Yeah.
There's websites. There's things. There's tangible proof, of the existence of the business. So evaluators look at all of that. That part of that whole name and brand thing is called blue sky, and evaluators look at all of that stuff and try to determine, okay, what part of it is income, what part of it is, excess earnings, what part of it is blue sky, and all that kind of thing. And that all impacts the overall value that is given to the court for division in the estate.
Right.
So
I guess the takeaway is that the court often will need experts to determine what is outside the ken or the knowledge of a lay person, which is the judge is a lay person when it comes to things like psychiatry and physical health and accounting.
Right.
So those are what it's useful. But you have to decide, am I going to kill a gnat with a sledgehammer?
Right.
You don't need a sledgehammer to kill a gnat. You can just smack it with your hand.
Right. Right. Yeah. Or, even more reason to me to stay in mediation, keep yourself out of court, do things in a more economical way, get these evaluations without, if you do an evaluation through mediation, you can say to that person, we're not going to use you as an expert in court. You're not going to have to testify or any of that. And you will get a much lower retainer quote for that. So yeah, like Thomas said, it's like determining if the powder's worth the explosion, right?
That's what's his name said.
Yeah. Okay. So we hope this has been helpful in learning about forensic, or in California, 730s also. You probably have something along the lines of 730 in your state though, but I think many people know what a forensic expert is when we use that terminology. So if you're watching us, I always say listening, I don't know why that comes out first. If you're watching us on YouTube, don't forget to hit like, subscribe to the channel so that you're aware when more video content is released. If you are listening to the podcast, don't forget to rate and review us wherever you're listening to us at. And thanks for joining us.
Thank you.
We'll grow in number, fueled by them to see the